Hey, good morning, everyone. Happy Tuesday. It's close to 7 a.m., April 21st, and I first wanted to quickly re-announce again that we are formerly Cryptosomniac and we have rebranded to Alpha Trades. All right, so you can find us on Twitter, TradingView, Medium, YouTube, and even Discord as Alpha Trades. Okay, so this is what you'll see, and the symbol that you'll see is kind of something like this. Okay. So let's get to it, folks. Let's get to the analysis. Crazy, crazy day yesterday, right? I'm sure a lot of you heard about the oil contracts for the current month going into the negative territory. And I'm going to explain that in a little bit. But first, real quick, I really wanted to give you guys a rundown of what I am expecting in the next 2 to 6 weeks of what's going to happen across America, as well as maybe some parts of the global economy, okay? First things first, I'm definitely expecting bond downgrades, especially here in America. There's going to be significant companies that are going to have their debt downgraded from maybe triple B status to maybe junk bond status or triple A to triple B. Again, if you want an explanation on this, come join our community. We have explanations in the education section. I talk about this with my community on a day-to-day basis or even in videos, okay? Next thing I'm expecting is, oil company defaults, especially, given the fact that the current month contract was already closed out in, the negative territory. The forward month, possibly June, is going to start selling off more than likely. And I would probably expect this at least into the summer months like June and July, at least, okay? We'll probably have to see how August and September react, depending on how the economy's open. But I'm expecting oil to take a massive hit over the next several months for sure. Okay, housing sector, I'm still starting to see a lot of trouble, especially the home construction area. The REITs themselves are looking very weak, something to pay attention to. We covered all this stuff actually in our Sunday video, folks. You can even see on Sunday, before the markets open, we talked about why this was a pivotal week ahead for the stock market, for the oil markets, for the bond markets. And then, yes, I am expecting somewhat of a housing, potentially the defaults and delinquencies rolling into a housing crash. Okay, that doesn't mean it's going to happen literally this week. It's just going to start. It's usually like a small rolling domino effect that you'll get to see. Okay, so these are the things that I'm expecting, and also on top of that, Italy defaults rolling into Netherlands and Germany, causing large-scale issues into the ECB and Eurozone. U.S. interest rates, I'm expecting at some point to go to negative. I don't know if that's going to happen in the next 2 to 6 weeks, but I am expecting the interest rates to go to negative at some point. U.S. dollar, I think, is going to explode. So that's the Dixie DXY ticker is probably going to explode past 100 again. I think in the middle of March, it went all the way to 115, I think. I expect gold to keep going up because I think we're going to face more of a recessionary environment, and gold does well then. I expect equities to start selling off, and I expect Bitcoin to start breaking down. Okay, so the reason I wanted to highlight these topics is because this is how I'm going to position myself and let my community know what kind of trades I'm taking. Okay, so the first things first, once we get to Bitcoin right here, all right. So we got into a Bitcoin short trade right around this area right here, about 69.50 all the way up to 69.80. Okay, so we're sitting in a pretty decent $100+ profit so far. You could see for the most part, over here, once the structure broke past 7,100, it retested 7,100, which is that marker as you see on the right, and then sold off some more. So Bitcoin is actually doing some pretty good retests, when it comes to key SR levels and starting to break down. So if you have an opportunity, you will get one with the way Bitcoin is retesting, because sometimes Bitcoin doesn't give you opportunities to get on a good trade, whether it's short or long. Sometimes it'll just, start going down really fast without proper retest, or sometimes it'll, really quickly go up without proper retest. Okay. So this was really the opportunity that I let my community members know exactly what I'm doing. Again, though we don't provide financial advice, we provide a good amount of information and education and trade setups in terms of what Faisal and myself are doing in the community in terms of our trades. Okay. So again, like I said, we are in a short right now. I expect Bitcoin to keep breaking down, especially given the fact that the ES, which is the S&P 500 E-mini futures contract is starting to break down as well. The month-long rising wedge, which is a bearish pattern right here, is now finally broken. Okay, so what I'm expecting out of this is hopefully a significant drop over the next several days, several weeks. And I think that should more than likely bring Bitcoin down as well. Okay, now people think and say that, oh, well, the halving is coming up and, I think Bitcoin is undervalued. Doesn't matter. Don't listen to these idiots because they do not understand what's happening with the macro picture of the economy. When you see a once in a lifetime event of oil, which is a multi-trillion-dollar industry, having their first forward contract going to negative, I'm pretty sure a $100 billion, $150 billion industry like Bitcoin can be crushed to significantly low prices. Okay, so the point is that I'm not saying that Bitcoin has to go to zero or anything like that. I'm saying that there is a very high chance that if equities sell off, Bitcoin will sell off with it. Okay, so far over the last month or 2 months almost, Bitcoin has been pretty much moving toe to toe with equities. All you really have to do is watch, the S&P 500. It's been pretty easy to just figure out what Bitcoin is going to do next based on what the ES or the SPX is going to do. Right? And this is one thing that we cover in our community. You could see all these lock channels that you see is for our Advantage members, okay? And this is where Facile provides updates on what's happening in the equity side. We get fantastic updates, opening and closing of the markets. So even the traders of Bitcoin can be prepared of what to be expecting in terms of price action based on what happened in the equities markets, okay? Facile and I have been trading the equities markets for years. And we've been trading Bitcoin, at least myself, I've been trading Bitcoin since 2016, okay? Now, because I've been trading equities longer, I understand the macro markets far more than probably most people do in the crypto Twitter world, okay? This is why we're able to ascertain and give you guys information that most people are not able to understand and tell you, okay? So first thing I wanna explain to you guys, obviously, is why the oil prices went negative and what that could mean in terms of a spillover into equities and then Bitcoin, okay? So let's get to it, right? I posted a quick explanation, I think yesterday. It was very brief, right? So you can see, first thing you need to understand is that the negative prices are only on the current futures contract, okay? So let's pull that up, right? So CL, there we go, current contract, okay? So you can see yesterday, prices went all the way down to this negative 37. They've since climbed up towards, I guess, $16 or so, okay? So fact of the matter is the reason prices went so low is because there's so much of a supply excess and a dismal demand, okay? So oil costs money to store, right? We have an excess of supply, dismal demand. The storage facilities are nearing capacity. If you look at Cushing Oil Storage, which is in Oklahoma, all right, they're pretty much, I think, 71 or 72% near capacity, okay? So with all the excess supply, they don't have places to store it. So the reason prices go negative is because these oil refineries or companies, they're telling you that, hey, you can take this barrel and we'll pay you to take this oil home, okay? So at negative $37, you could have literally gone there and picked up this oil and a barrel of it, and they would have paid you to take it out their hands because it's expensive to store oil, all right? And you can't just keep it anywhere. You can't dump it anywhere, right, due to EPA regulations, okay? So point is, they would have paid you. And the same goes for the futures contracts. It's because traders themselves, they did not want to buy long contracts because these were physical delivered futures. So what the hell are they going to do with these physically delivered oil barrels, right? So they said, screw it, I don't want to buy it, and even if they did buy it, they wanted to get paid for buying something because it's not even being used right now. Airlines are not using it right now. Cruise lines are not using it right now. People are not driving around. So what the heck do you do with a barrel of oil that has no use right now, right? So that's why you see negative prices, okay? Now the futures contracts for the next forward months are probably gonna be slightly higher, but I expect them to start selling off too. So let's check those out, right? Let's check out June. Okay, so here's a June contract. Okay, so there you see it. Okay, over just the last 2 or 3 hours, you actually saw a big drop from $20 all the way to about $11.80 or so. Okay, so you can see this is spilling over into the forward months, not just May, June, maybe even July. We can even check out July. All right, let's check out July. So you can see July is selling off too. The reason they're selling off is because traders themselves in the commodities area, especially oil and gas, are expecting demand to be bad, supply to be in excess. Because remember, the rigs themselves still have a lot of oil that they've produced, or some of them may still be producing. Because at a cheaper price of oil, they actually have to produce more to just break even. Because oil itself is pretty expensive to actually produce, right? To have these big oil rigs, to pay your employees, to pay for the equipment, etc. It costs a lot. Okay, there's a statistic that says that, you know, above $30, all right, above $30 of oil, 61% of companies are solvent. That means that above 30, already 39% are insolvent. So now that oil prices are lower than $30, they hit almost, you know, $20 for the July contract, $11 for the June contracts. You could see the oil industry is going to suffer. And then what's going to happen? If oil suffers, that rolls into, okay, that rolls into banks, all right? Because remember, Citigroup, Wells Fargo, other banks have exposure to oil companies. They lend them money, they lend them loans, etc. So if those oil companies close down, or they, you know, start defaulting on their loans, that goes onto the balance books of these companies right here, these financial sector companies. If that happens, that starts rolling into the economy as well, because then you'll start seeing the banking sector suffer. So this is the whole, you know, shitstorm that we saw in 2007, 2008. Okay, is because mortgage-backed securities, which were basically, you know, big mortgage loans rolled into these tranches, right? People started defaulting on them. Right? And if they start defaulting on them, these mortgage companies cannot pay back their lenders, and lenders cannot pay back their banks, etc. Okay, so you could see that it's a big domino effect. And so to understand all of this and pack it into, well, how the hell does this affect equities markets? Well, remember, oil is about 8% of American GDP. Oil is 8% of American GDP. It houses about 8.9 or 8.5 million jobs in America. It's a pretty significant part of the global GDP too, okay? So when oil goes down and when oil suffers in one area, whether it's America, it's going to start suffering in the other parts of the world too. I can guarantee you that UK oil, which is Brent, all right, has also suffered, okay? Take a look, right? UK oil, which is, you know, consists of different refineries and different oil rigs from different parts of the world, also took a hit because they're starting to realize that, holy crap, we have all this oil, not enough demand. How the heck do we solve this problem? Well, I mean, oil prices are going to go down, right? It doesn't matter how low oil is. It's not like people are going to start buying it and using it more because it's cheap, okay? No one's going to be out there saying that, you know, hey guys, oil is cheap. Let's go on, you know, cross-country road trip. Right? No, you're hunkered down. You're sitting at home. You're ordering, you know, pizza at home, or you're sitting at home and, you know, watching Netflix. Okay. So supply in excess, demand is dismal. All right. So this rolls into, okay, the S&P 500 or equities. All right. So you can see the big rising wedge finally broke down, and I expect this to start rolling into Bitcoin. Okay. So going forward, these are the things that I'm going to start looking at. All right, another trade that I gave to my community is this one right here. Okay, we entered right there around 1087. All right, we're sitting in a couple of hundred pips of profit so far, as you can see. So this is about 0.35% move. I know you guys think that's a pretty small piddly move, but when you start trading with margin on Forex, that's a lot of money. Okay, so point is, our Forex trades are doing well. Our Bitcoin trade is going well. I also longed gold as well, so that is doing pretty well, okay? So for the most part, I let my Advantage community members know exactly what I'm doing, and if you guys would like to know, go to cryptosomniac.com. Again, we're still transitioning the Cryptosomniac website to our Alpha Trades community right here, okay? Go to cryptosomniac.com, hit the products page right there, and again, right now, the membership is only 97, okay? Starting May 5th is going to start being above 125 a month. because we've started to offer not only crypto analysis, but we have equities analysis, we have Forex updates, we have updates on oil, and then options as well. Okay, so tons of information for the same price. All right, I think that's a pretty darn good deal. Okay, and you can follow me on Twitter as well. I put up a lot of updates. You know, for example, one thing I wanted you guys to be aware of is if any of you own Peloton shares, okay, Comcast last night just dumped $178 million worth of Peloton shares. So be careful, all right, if you're trading Peloton, okay? Dow Jones yesterday obviously dropped almost 600 points, you know, about 2.4% drop. Let me see here. What else do we want to talk about? Yes, so this was the article you guys need to check out on my Twitter from Zero Hedge. Bond downgrades are probably coming soon, which is going to mean a lot because remember, bonds are possibly the most important part that dictate, you know, the health of the economy, okay? And once bonds start seeing struggle, okay, you're going to start seeing that roll into equities as well, such as the S&P 500, NASDAQ, Dow Jones, etc. Okay, so it's time to start being careful, and we will, you know, obviously update our folks in the Advantage side. And like I said, folks, you know, if you really want key updates like this, like the video that you're watching, by the time you watch in a couple hours into it, price may have moved, you know, a couple $100 up or down. Markets may have shifted. New news may have come out. And this is why we update you guys on a day-to-day basis. And I show you guys all these updates as you can see right here, you know. With the morning video that you see right now, we also have updates through the day on Bitcoin. We have, like I said, equities updates through the day with morning and, you know, sometimes mid-afternoon updates, sometimes closing updates. We have Forex updates, like I told y'all also, right? So point is, in oil updates too, actually. You can see right there, closing update on oil, okay? So tons of information for you to learn, digest, utilize. All right. I think that's pretty much it. So let me check out the daily real quick on Bitcoin. Again, all we really did was from this high to this low, we tapped that, you know, just above that 50% daily level. It looks like we're starting to break down, but no confirmed breakdown yet. We still need to make sure that we can actually start breaking down. The first level that you really want to see if you want to be sure that there's going to be more of a confirmation and sell-off is this low right here. That needs to be broken. So you want to do something like this, you know, start using this as resistance, and then it starts breaking down. Then you can start trading and shorting right around 6,500. Again, not financial advice. This is what I would do if I wasn't in a trade from where I was up here. Okay, so I would probably, you know, grab a short right there, maybe a stop somewhere up here, and start riding this down. Okay. And, you know, I think if equities go down and oil prices go down and we start seeing bond downgrades, I'm pretty sure Bitcoin is going to be impacted. No one cares about the halving. No one cares about anything regarding Bitcoin and its miners. If investors across the board, if they want cash, they'll sell Bitcoin at whatever price is, you know, available. Okay. Just like we kind of saw in, you know, in March as well, right? When there's a liquidity crisis, no one cares, okay? High-risk assets like Bitcoin will get, you know, completely decimated because it's not worth anything to anyone right now, right? So you'll sell Bitcoin at whatever price is available, and if it climbs back up, it climbs back up. But if the economy doesn't improve, if, you know, equities start selling off some more, if bonds get worse, you'll sell off Bitcoin some more, okay? And then you might even see a lower low. So this is why I even, you know, wrote this article here on our TradingView. You can go check us out, the Alpha Trades on TradingView. Why Bitcoin halving could be priced in and higher chance of 3,000. I actually believe that it could actually be lower than 3,000, but we can discuss that in a later video. Okay, so follow us on Twitter. Give us a thumbs up, folks, on our videos. Subscribe to our channel because we provide a ton of content and we provide a ton of useful, impactful information for you to be informed and, you know, information for you to utilize. Okay, thank you so much for watching, and I will catch up with you all soon. Cheers.